Hey everyone, me Kevin here. Welcome back. Today, well, right now in this video, we are going to debate, well, maybe not necessarily debate, discuss Tesla versus Lucid and the CCIV SPAC. And to help me do this, I brought an EV expert on board. I brought Gally from HyperChange on board. Absolutely incredible mind, not just in the world of EVs, board member of Archimoto, but also on cryptocurrencies, which we'll definitely have to talk about, especially since Tesla's going in. Who knows, maybe Lucid will have to go into some BTC. Maybe they won't have to do any capital raises then, but we'll get to debate that. We'll see what happens. So I'm super excited. Gally, welcome aboard. Welcome on. Thank you so much for being here for a second time. First person to come back twice. Thank you.
Yeah, thank you so much for having me. Lots to discuss today.
It is a crazy day. I want to start by asking you, what did you think when you saw what happened with just the broad market today? Because today there was a whole lot of pain when a lot of people woke up. People's poopy came out before going to the bathroom,
Yeah, I mean, personally, I think the market had been going up for so long and been in this euphoric bubble state. So I'm always like, trying to buy businesses at cheaper prices, and I already have my, to buy list. So I thought it was a healthy pullback and correction. We can't go up 10% every single day with some of these crazy SPAC stocks.
It's really, it's almost just been this kind of insane market where sometimes I look at what the market's doing. I'm like, really? Things are up. Even CCIV, it's up this much more today. Really? Like, it makes me wonder sometimes, like, where's all this freaking money coming from? Sometimes I feel like people are like anxious to place all this money, and it's like, I got to put it somewhere. I got to put it somewhere today. And I'm like, where the hell is it all coming from? It's like a bottomless pit of money. What do you think? Is it just Jerome with the money printer? What's going on?
Yeah, no, it definitely feels like that, because it feels like, there's no relation to the core business. There's just this huge pile of capital, whether it's GameStop or Bitcoin or Ethereum or whatever the flavor of the day is, that is just hunting to find it. And so I'm trying to think, is that, hyperinflation that we're seeing among fiat currency, and like what Michael Saylor's saying, Tesla's buying Bitcoin. Is it just that everything in dollars is going crazy? But yeah, I got it. It blows my mind how much money is just flowing into literally anything. With the SPAC EV name behind it. And Lucid, it just felt like the convergence of all of these trends at once, SPAC, EV, Tesla competitor, a really sexy, cool car.
It really was. I mean, there was a point where this thing went to, I told myself, I bought in at CCIV at like $19 or something like that. And there was a point where I'm like, okay, how is this thing over $60? Like, if this keeps going, this is going to be like Nikola day one, where it went from like $10 to like $90 in like 2 days. Like, that was insane. And here it was like almost the same pattern happening again. I remember saying on my channel, like, look, it's one thing if you buy the thing, like certainly under $20, maybe it's another thing you buy it under 30, something like that, but $60. But it felt like it was going to keep going. And is it really just an anxiety for people to place money, or what's behind this? Or is it Wall Street bets? What is this?
I mean, it feels like a real FOMO. Like, the amount of people that bought Lucid to really hold on for the long term and invest at this valuation was super few, versus people who bought because, Bloomberg and Reuters had announced that it would SPAC at this huge valuation. Everyone's like, oh, when the deal gets announced, it'll moon. And if everyone thinks that, then it's already priced in. Like, I don't know why people thought they had an edge by reading the same Reuters article that everyone else read, but I don't know. So I've never been a fan of that type of investing. Like, I'm more of like, do your homework, understand the company, don't just buy it because it's going to SPAC and everyone else is going to buy it. This kind of FOMO trade.
I mean, it's very similar to like, don't buy Tesla because of a split, or like the first time the rumor came around, right? Nothing's fundamentally changing with the business, but sometimes the market goes nuts. And the first split rumor, Tesla went to, I think, 525, only to fall back to like 370 after the split didn't happen. And then second, like confirmed split is coming, the thing literally goes from that like 380, 400 level to like 800. I mean, in some sense, like, I remember when the split was announced the second time, like officially, like, okay, it's not a rumor, it's actually going to happen now. I remember thinking to myself, is this just going to run up and then come falling back down because people are trading the news? But I mean, surprisingly, relative to the pricing over the last few months, Tesla's held up.
Yeah. And I mean, in the long run, they say the market is a weighing machine, but in the short term, it's a voting machine. That's that famous Ben Graham
Oh,
quote. And that's just what I
mm,
feel like it is right now. Nothing else matters. What's happening at Casa Grande, Arizona, at that Lucid factory? How much better is
yeah.
it than a week ago? That's what I'd be focusing on if I was looking at the company. And so I think eventually this will all, even out and somehow rationalize back to that intrinsic valuation of these assets.
So let's talk about that. So Xpeng actually delivers vehicles. I think they delivered like 4,000 cars, 3,000, 4,000 cars in December or something like that. Maybe it was January, whatever. Neo, they went from, I think, 7,000 in January to like 7,200 or something like that a month later. So December to January. These are companies delivering vehicles. Neo's got the battery swapping tech. Xpeng's got their own gig. They've got some creative things going on. Xpeng valued somewhere around 30 bill. After today, probably, take off 10%. I didn't look at the updated valuation today. Neo somewhere around 80 bill before whatever happened today. Now we've got Lucid here. Based on today's pricing, probably somewhere around, $58 billion. Does Lucid fit in between Xpeng and Neo, who are actually delivering vehicles right now?
It seems a little bit ridiculous. And I think we just forget how low margin the automotive business was and how like these companies are so detached from the current profit or cash flow stream that they're actually generating. Like, all these companies are burning insane amounts of money. So I don't know. I think it is. And then when I think about the long-term Holy Grail, why are these companies, tech companies, they're looking at as tech companies, not car companies? It's because of this autonomous future. How much software can we sell as a part of the car? And that's something where I think Tesla's going to have a monopoly on million cars, billions of miles of data, first to achieve the L5 self-driving car. Lucid's not really talking about their self-driving strategy other than saying we have, more sensors than Tesla and like more LiDAR. But it's like, like, that to me is the crux of if we're really thinking about why Tesla's justified hundreds of billions, why Lucid could, if you're going to buy in at 60 billion, this better be, 500 billion in 5 or 10 years. Otherwise, where's your upside, right? So for that to happen, they need to have a robo-taxi, a truly autonomous vehicle almost, and an energy business. It's like when you think about, even if they dominate that, luxury OEM niche and can become the electric Mercedes, electric ultra premium BMW, that's a $10 billion company. So you're pricing that in and the next 3 vehicles they bring out. So at just what point are we pricing in too much of the future here, right?
Right. Yeah, that's actually, it's something that I've said about, and it's been one of my frustrations with Lucid. Maybe I can even pull it up. Maybe I shouldn't even mention where it's from. Maybe I won't do that. But there's one of my biggest concerns with Lucid has been the lack of talk around autonomy. Like you're saying here, my belief is that any electric vehicle company is only a car with batteries unless they actually have the autonomy, that the autonomy is where the play is. That's one of the reasons every time Tesla's red, I'm such a bull on I'm adding to this. I posted a video today about the Federal Reserve and my comments on the Federal Reserve. I filmed that while I was driving to Santa Barbara at 80 miles an hour on autopilot. Now, of course, I was still paying attention to the road and making sure that, things were safe. But, that was a 9.5 minute video. And I felt like I didn't even need to be there. And I don't even have full self-driving. I have the highway full self-driving or whatever it's called, but not where it goes through the streets or whatever. And one of the things I did is I reached out to Lucid and I said, hey, where is the autonomy? I want to know the autonomy. I actually reached out to Trevor Milton as well about this autonomy. I know, back in the Nikola days. You got to do your DD, man.
No,
but anyway,
I
asked, I go, look, I need to know, where is the autonomy? That's what I care about. And he said, yeah, we're not planning on launching the Badger with autonomy. And I'm like, what? No self-driving. I mean, now obviously in hindsight, it's like the Badger was a beautiful picture. It was maybe something we could non-fungible token, not something we can actually drive. We'll have to talk about that. But I asked Lucid the same thing, and I won't go into the details of how, but essentially, the response I got is, oh, well, we've got the technology, we've got what it takes to do level 3, but we're not ready to disclose the actual system we have yet. And here I am thinking, wouldn't that be like a crucial part of the valuation to provide, like, if you're going to have a 72-page investor presentation, wouldn't you at least talk about autonomy on one of the pages? What's going on?
Totally. And that's something that doesn't connect with me with Lucid. I'm curious, your take is like, is it a car where I'm supposed to be driven around and I sit in the back seat? Because if you look at their marketing and messaging and the styling of the inside of the car, that's what it is, like this sort of executive back seat, which is great and comfy, but it's like, aren't the cars going to be driving ourselves? Like, I don't know. It feels like but it's built to be chauffeured kind of. So I feel like there's kind of a disconnect between the vision of Lucid. And that's what I wonder is, when I backed out of the $650 million backlog, they only have about 5,000 reservations, and those are fully refundable. So even up to like Nikola, that kind of pales in comparison. So, they put it out there, they've spent all this millions of dollars in marketing, but I don't think there's a product market fit. Like, there's no evidence that this Lucid Air is actually something people even want. Like, it's just more expensive with worse specs than the Model S, but maybe slightly better stitching on the seats. Like, is that really going to justify a $60 billion company? Like, when I take a step back, I say, who actually, I haven't ever met one person who's like wants to buy the Lucid Air. And I know a ton of people who have Teslas. I am an EV customer who's thinking about the Plaid Model S. I'm not even considering the Lucid model. They're saying their charging is better, but they want me to use Electrify America instead of the Tesla superchargers. That's luxury. So like, something doesn't fit about this actually being a game-changing billion-dollar product to even justify the $10 billion market cap that we're getting to. So I don't know. I'm curious, what am I missing here that gets you so excited about a luxury electric sedan competing head-on with Elon Musk and Tesla?
Right. Yeah, the excitement, I think, so I think the question is, why would I invest in Lucid? And the reason I invested in Lucid is as a social play, as an alternate to Tesla. It is very difficult to take a company now and project out, and we can. In fact, I wrote down, what some of my original thinking was, and what it's on the mouse. Some of my original notes on this were, this company wants to ramp to 400,000 vehicles. It's going to take them a very long time to do that. If they ramp to, let's say, 400,000 vehicles by 2026, let's say, and they have an average selling price, because it'll come down. They're going to sell these 140K cars. That's going to come down. They might end up with, let's say, an 80,000 average selling price. We'll go with that as an example. That's somewhere around 32 billion in revenue. So then they're selling for 2 times 2026 revenue. And when you compare that to Tesla, we can play numbers all day long, of course, but when we compare it to Tesla, Tesla, at least I've been thinking probably somewhere around the neighborhood of 5 million cars by 2026. I think you have a chart on this. I haven't looked at your chart. I try to look at play my own numbers, but I'd love to hear yours. So if they do, let's say, 5 million cars by 2026, and they sell these for 40K a pop, it's around 200 bill in rev. That puts them around, today's value, like 3.5 times 2026 rev. So really, what Lucid is under $30 it's a social play on a Tesla alternative. Once we get over $40, $50, $60, it starts getting, way ahead of itself. But when we look at, potential for 2026, Lucid has the potential for building into something that could eventually compete with Tesla. I think it's silly when the CEO says that he doesn't want to compete with Tesla. He's competing with Tesla. Like, I don't know who he's kidding. It's clearly a Tesla competitor. And in a weird way, and I want to hear your thoughts on this too, in a weird way, it feels like the only potential Tesla competitor. And don't get me wrong, they're 3 or 4 years behind Tesla. They could be 5, 6 years behind Tesla. But they're the only freaking one, unless you want to go to NIO and Xpeng, or but then you're in China. What do you think?
Yeah, no, excellent points on the valuation, the price sales comparison. I personally think Tesla is kind of way too highly priced right now, though. Like, I'm like, dude, the last thing you should be pegging it to is Tesla, which just ran up 20x and is trading at quadruple what it should be. Yes. Like, yeah, if that's the only way we can justify Lucid, then. But I also think in their investor presentation, they said 500,000 cars by 2030. So that's their goal. So maybe the 400K by 2026, a little aggressive. But I think you're right there. If they can justify and break that norm, and that norm exists where car companies trade at 4 or 5 times sales versus 0.5 times sales, which was 5 years ago, like Ford and GM, then yeah, there's a chance to rationalize zero upside from 60 billion 5 years in the future. But I think how much of that price sales premium is priced in because it's software software, because it's going to be autonomous, and because Tesla has this unique Elon Musk innovation solving the world's largest, $1 trillion autonomy problem priced into the story, that I think Lucid is not going to be able to justify the high price sales multiple without that. So I don't know. There's lots of kind of different factors at play there, though.
You know what I think is, I think, so two parts to this answer. One, I do think first of all, the autonomy value at Tesla could be an entirely separate business. Like they could spin that off as just an AI company, and it would be the best tech company that exists in the world. I feel like it's so brilliant, the technology they have there. It surprises me that more companies aren't like, get your act together and start chasing Tesla on this already. Who knows? Maybe Apple is. We'll talk about Apple in a bit. But in terms of the actual vehicle and who might be buying this car, to finish the thought on autonomy, it is possible, obviously, they could just, and they'll probably end up doing this, they'll probably just plug in a Mobileye. They'll probably plug in like, what Tesla did in 2016. They take the off-the-shelf chip, which is not as energy efficient. They plug it in. Cool, we got autonomy. Great. I mean, at this point, you could do that. You could go to Qualcomm, get autonomy. You can go to Mobileye. You can go to NVIDIA. They've all got it. You can plug and play it. It's not going to be as great as Tesla, in my opinion, but they'll have the autonomy, kind of like NIO in China. But in terms of who this might appeal to, like, why haven't you met somebody who's like, I want to buy a Lucid? Well, first of all, it's expensive, but okay, this might sound funny, but I want to hear your thought on this. I think it might be a boomer car.
Dude, I think it is a boomer car, because all of the things that they're saying, like, oh, we're going to have this better detailing, the better interior. Like, that's what like your dad's friend says about why he doesn't want to get a Tesla, because the detailing's not as good as Mercedes. And all the companies they're copying, BMW and Mercedes, are all declining and getting disrupted by Tesla. So the market's showing you they don't want that. So that's, I don't know. And I think if you just think about it rationally, the autopilot, the charging, the price, the speed, the range are all better with the Tesla. So what gives here? And as many people, that what I'm big on recently with all this is like Lucid gets this huge premium because they are competing with Tesla. They are a similar company, but I look at that as the biggest weakness. The last company I want to invest in is something going head on with Elon Musk. And with the look at Battery Day. Every single innovation at Battery Day that was listed is not going to be in the Lucid car. Cell to structure battery pack, 4680 cell, the machine that builds the machine, this revolutionary way to build it, the tabless electrode. This is like layers and layers of cost advantages and technology advantages that we haven't even started with Lucid. So when I think about as much opportunity as there is electrification autonomy, I just have this weird gut feeling that it's a monopoly runaway effect, and that this weird pricing in of like every company having a chance at that Holy Grail, which is seemed what we're doing, just doesn't seem to sit well with me.
Yeah, and I think that's something that's so weird about Tesla, is that in some sense, it's hard for us to believe that there could be a winner take all, pretty much. It's hard for us to believe that, because we've all grown up and lived with Toyota, Honda, Hyundai, Ford. Like, I mean, there's too many car companies to even bother listing right now. We're just wasting time. It's shocking to think that in 5 years, certainly the next 10 years, we could be in a place where you got two names in the game and that's it. Which one do you want? It's weird to think that could be a potential. I think there's going to be a lot more collapsing than we've ever had before. Like, there'll be a great collapsing, so to speak. What's your take on that?
Yeah. And as much as the robotaxi is this Holy Grail great business, I mean, at the end of the day, you're buying the robotaxi from your own production line. And instead of getting that 50 grand or 100 grand up front for that car, you're going to collect it in increments over time. So even the robotaxi, when you think of it, and then you have competing robotaxi networks pricing to the bottom, it's like, maybe that's a really crappy capital intensive business as well. Like, you know what I mean? So even if Lucid is doing 32 billion in revenue in 2026, like, how much of that is actually flowing to the bottom line? 6 billion, a 20% margin in a best case scenario. That's 6 billion. It's like a 10 times PE.
Probably half that.
Probably half that. Exactly. So I don't know. I'm also just part of the Lucid CEO. I'm not sold on him being like the game changing innovator to change the world, right? That's what you need if you're going to go all the way and disrupt these industries. And like Elon Musk was that guy. I don't see the Lucid guy as having this kind of visionary approach. Like, his business model is basically copy Tesla, but add like a Salt Bay of Mercedes. Like, that's not a $1 trillion idea. Like,
hey, they got some cool LED lights inside. Have you seen those?
No, I haven't. Maybe that'll sell me. That might change my mind.
Yeah, I'll have to pull that up. Now, one thing I want to mention, because you mentioned this, and it's a good actually thing about Lucid here, or a criticism of Lucid, is this marketing presentation. I saw that what you talked about. I'm going to pull up those LEDs, but oh, here we go. Okay, well, I gotta say two things. So first the LEDs, then we got to talk about the those seats you're talking about in the back. So this, look at that. Look at those sweet blue LEDs. Come on, man. That's money right there.
I actually got a $30 mod for my Tesla where I have purple lights inside, and it looks super like that. It's honestly dope. That's gonna look cool. I'm not gonna lie. That looks cool.
This is Lucid LED though.
Oh.
Now, one thing that's really funny, and I made this connection earlier, but I actually had written this yesterday, and I just realized I had this note here. But I actually wrote under this, I wrote Apple Strat. And the reason I put that is because when I was researching the Apple car, they were talking about literally hiring people solely for the purpose of like designing console LEDs. And I'm like, that's interesting. And then here this is with all these fancy LEDs and stuff. But I have to say, we'll touch on that. But I want to go to this car thing, this reclining thing. And I do want to caution anyone who's thinking about investing in a SPAC. One of the worst things you could look at when investing in a SPAC is these investor presentations. Because these investor presentations, I feel like, are a bunch of baloney. This is really cool. But like then they write, it's always the fine print that gets you. Is planned for future release, So like that won't even exist at the beginning. There was another thing too. Oh yeah, here it is. So look at this. Efficiency is the ultimate measure of EV tech. And I agree with that. I think the, kilometers per mile or what is it? The kilowatt hour or miles per kilowatt hour, right? Exactly. Miles per kilowatt hour. Hey, if Tesla's at 4, or what they're saying, under 4 or whatever, and they think Lucid's at 4.5, whatever, that's great. I agree with them that this technology is important. But we also don't actually have real tests yet. And this is something that does bother me about Lucid, and I'm just being transparent about that because, I can invest in a company but still be pissed about things. I get pissed at Elon sometimes too. There's some things I wish they did differently, which we can talk about. But take a look at this. Data for Lucid Air Grand Touring is based on projected EPA range, estimated range. EPA estimated range for Lucid vehicles are not available. So it's like literally they're making up their own numbers and saying, we think the EPA is going to think this, but we don't know. So yeah, look, I mean, with a SPAC, I think what's really important to remember is, let me put myself up here. What's so important to remember with these SPACs is they're these infant little brats basically that just walk around your house and slobber up the walls and ruin everything and suck money out of you. And Tesla was no different 5 years ago even, right? But again, Tesla's got that lead now.
Yeah. And at what point do people care? I'm just baffled. Like that Lucid makes no money, that Nikola makes no money. That all the estimates are fake, or like, actually, well, I do want to give them some credit on that 500-mile range thing, because if they can pull that off and deliver that car before the Tesla hits the 500-mile range, like if they can deliver a customer car of 500 miles that actually does hit that before Tesla does, like that would be an achievement. Like I'm a skeptic. I'm like, walk the walk, don't talk the talk kind of guy. But if they do that and to get even one customer that goes 500 miles, like I'll kind of be like, all right, like that's a solid achievement. But I'm also like, damn, the margins on that car must be atrocious, But
well, then again, it's 160 grand.
True, it is 160 grand. But so there's a lot where it's kind of like, it's just, if they could pull it off, I think there's like, I see the potential.
It's hopium. It's the cheaper you can get into some of these SPACs, great. There's a lot of hope built into this. I'm excited about it. Like I'm up on my position. I 2x'd my position on it. There was a point it was 3x. To me, it doesn't so much matter because I look at it as, all right, I've got this massive Tesla portfolio, and I look at, okay, what is the best possible number 2 I could put my money into? I love the idea of being gung-ho about winner take all, but I do the same thing in energy too. So for example, I'm a huge Tesla energy bull. I think Tesla energy is one of the most undervalued businesses that exists. The solar subscription model, I know you're big on the solar roof. The solar subscription model, game changer. My number 2 is Enphase, because people who don't buy Tesla products buy solar products from other companies who oftentimes use the high quality reliability of Enphase, high margin business, producing profits, actually making a product. But where do you go for a number 2? Like, if you had to pick a number 2, do you go to China, or where do you go for a number 2? It's so weird how far ahead Tesla is.
Yeah. I mean, I spend my energy looking for other number 1s because I
like that.
Number 2s are never where the money is. I mean, Apple had 10% of the smartphone market share, 90% of the profits. I just think the innovator commands the profit margin in any industry. And like, every time I've tried to get smart and guess, whose Tesla's supplier is, I was long Molycorp stock before it was MP Materials in 2011 and got burned on that. Like, cause I was, getting smart on the cell phone craze by buying rare earths. Like, every time, to me, there's so much in the package and the brand and the tech and that one innovator who's leading. Maybe you could say Snap and Evan Spiegel got screwed by Facebook, and that would be one example where that didn't happen with the stories. But in general, I just feel like there's not many scenarios where the number 2, like, I don't know. I just don't see, I don't see it.
Yeah, it's something where, you look at, like, you've got Microsoft and Apple, but is, who's the third? Like, are you going to go to Acer? Yeah, or whatever. Like, where's the? I mean, I suppose Microsoft isn't directly producing computers. I should think of a better analogy.
And now, when I think of number 2, I think of Neo and Xpeng, because so Tesla's going to be premium software. I think that's really hard to catch up with. The other big part of the market is cheaper batteries, right? And so I think that Neo, which is and Xpeng, could be eventually subsidized by the Chinese government. They could eventually start exporting, which they're already kind of dabbling in. And like, to me, that is a serious number 2. Is I think China let Tesla build a factory there, built up all their supply chains, knows this is the next century's fuel, and is going to go all out in EVs, and has this kind of government tolerance to take a price hit and just undercut everybody with. So when I think about number 2, I think about Lucid. It's like, dude, Lucid is in real trouble when you think about Tesla on this side and all the Chinese EV OEMs on that side. So if I'm thinking number 2 in the EV game, I think I don't think it's Rivian or Lucid. I think it's a Chinese OEM.
It very well could be. Neos, I would probably expect to see some Neos over here, and maybe even still in Biden's first term. I don't know if they'll actually get a factory out here. That one of the issues I have with Neo is, and this is where, and we'll see, because we actually haven't seen anything other than like beta vehicles, is, and maybe this is not an issue at all, but Neo's got their partnership with JAC to manufacture vehicles with JAC, 50% owned by Volkswagen, 50% by China. They're not producing their own vehicles, right? They're not producing their own batteries. In fairness, even though Lucid started as a battery company and they use some of their battery technology, they're also going to partner to get their vehicle mainstream. Maybe in the future they'll have their own version of a 4680. But that is one place where I see a little bit of a differentiation between Lucid and Neo is on that manufacturing side. How much of a concern do you think there should be with Neo partnering rather than vertically integrating?
Well, I think Neo's winning because they actually have tens of thousands of cars on the road. So I would say Neo's strategy in that way is already better. Yeah, Lucid can say on their PowerPoint, we're vertically integrated like Tesla because we're doing our own factory, so we're way doper. But let's see if you can actually scale cost effectively in the US now, because that's where the rubber meets the road. So I'll be very curious to see if they can pull that off, because I think that wholly owned factory either becomes a huge asset if you know how to run it, or a massive liability that kills you if you don't know what you're doing. And so Lucid, to me, hasn't proven either one of those.
Yeah, it's true. That's where the benefit of partnering with a manufacturer is. They already have experience in manufacturing. Speaking of that, tell me about what you can regarding what you've learned from manufacturing at Arcimoto.
I mean, I don't want to speak too much on Arcimoto, but I got to be careful about what I say. But even more so, I've learned from like Tesla, I feel like, because I got a couple factory tours of the Tesla factories, like with investor relations back in the day in Fremont with Martin. He's awesome. And like I felt like that, seeing the Tesla Fremont factory change and how it failed with Model 3, how they had to build the tent, how they had this crazy network of like conveyor belts to automate everything that totally failed. Yeah, they got so much hate, and failing is the only way to succeed, you know? And I don't think Lucid has even failed once yet. So if you're going to be a
man.
What? They're that good. Yeah. but if you're going to be a shareholder, like expect the failures, like be ready for Lucid to like come out and say they just delayed production. That was the other news that came out. Nobody even like the fact that like their one fundamental metric is when they're going to deliver their first car. And like that got pushed back. Nobody's even talking about that. But that to me is the one thing to watch. It's like, yeah, it's just the execution. Let's see if they can do it. Cause I think there's going to be a huge, huge hiccup.
What do you think about all of these, electric vehicle commercial companies? You know, obviously there was a massive sell-off in Workhorse today when they lost the USPS contract, but you've got these companies like Arrival that gets pre-orders from Amazon. Canoe gets pre-orders from Amazon. Yeah, pre-orders. I do the quote unquote because I think the whole pre-order thing is, you know, sorry, but bullshit. So, you know, it's just endless. You know, when is this going to stop? How many more times am I going to hear that there's a company that's going to EV every school bus?
Yeah. And the reason why everything hasn't been EV is because the tech just isn't there. Like it's not good enough. The batteries weren't good enough. All that stuff wasn't good enough. And so when you're investing in these high growth tech companies, like it's like, what is not necessarily the financial statements, not what products do they have, but what's the tech they're building and how can that relay out to the world? So, you know, whether Tesla's building these kind of buses or all that stuff now, like they have the battery that every other company needs. They have the self-driving that every other company needs. They have the charging infrastructure that every other company needs. So all of the core competencies that would lead to sustainable competitive advantages for those companies, I see them having no advantage if Tesla tries to enter that market. And the only reason Tesla hasn't tried to enter that market is because the ROI isn't there because the tech's not good enough. And Tesla's leading in the tech. So they're going to do it first when it's ready. Canoe is not going to come beat them at, you know, I know I'm like a little bit way too much on my Tesla diehard kind of fanboy line of thought, but I'm just trying to be candid. Like if I saw these companies as a threat and thought they were credible, I would, but it's like, you know, just walk down the tech needed to achieve their vision and tell me that Tesla's not leading in every single category that they need to have, you know? So that's where I kind of struggle to see the excitement.
In fairness and counter on the Tesla, and obviously I'm a huge Tesla bull, you know, they can't get their Roadster, they can't get their Cybertruck, they can't get their semi-truck. They're having trouble getting these things launched. They got so many ideas, but, you know, even the Cybertruck just got delayed. Yeah, delays happen in automotive. You know, is that something that's a death threat for Lucid, or is it just you know, par for the course?
It's par for the course, and that's where we gotta, you know, let Lucid fail a little bit because if I can't like knock them for always delaying, and then Tesla delays and I don't knock them, so I'm trying to see both sides because I feel like that's just par for the course. Like you know, every EV company is going to do delays. It's like in the rule of startups, like everything takes twice as long as you think and costs twice as much. That's a great rule of thumb, you know?
Like that, you know, we say that in real estate too.
There you go.
We've gotten to the point sometimes where it's like, okay, that's your estimate, double it, and then add 50% more. Just like it keeps getting worse and more ridiculous. But yeah, so I mean, even like look at Plug Power. You know, Plug Power goes to the moon on all this euphoria over there's going to be a partnership with Renault, the automotive manufacturer in France, and they're going to have hydrogen trucks. And I'm like, dude, hydrogen's 10 years away. We don't have the infrastructure. They're not profitable in their forklift business. I'm not trying to bag on Plug, but Plug 7Xing, you know, like at some point, the valuations don't make sense. And this is where it's like, look, you know, am I okay investing in, let's say, the Xpeng? I'm going to call it the Neo or the Xpeng of America at 60 bill, you know, or 58 bill, wherever it is. Hey, you know what? As a small part of my portfolio, sure. Am I going to buy heavily there? No. Did I like buying it heavily at $19? Totally, obviously. Happy bought it there. But yeah, I mean, the vast majority of my new money is going into Tesla, and it makes me just wonder, is this going to be a cycle basically? So the question is this going to be a cycle where basically, whether it's Wall Street bets or the trend of the day, money just circulates and goes, okay, now it's Plug. Okay, now it's CCIV. Okay, tomorrow it's Canoe, and then it's over there. What's the future like?
That definitely is. And I think at some point, the quarterly earnings have to happen and these companies have to show that they're making progress. And that's the one thing that I would look to cut through all the BS in this is, Plug Power. Another one's like Blink Charging. I've seen those names pop up. What do they always do? Dilute shareholders. Every opportunity that comes up where the stock goes up, they're diluting shareholders and trying to, the what? Oh, no, I haven't, but they're doing the same thing probably.
Dude, that guy, every single time the stock goes up, new offering.
Dude, is Lucid selling cars or stock? We don't know. Right now, they're a lot better at selling stock than cars, and they've sold a lot more stock, and it'll take them years to even match that. So, I think it's like, yeah, I don't know. That's my take on Lucid is I really think the stock is the product, and I want to see them execute each quarter and look at the dilution. How much capital are we burning? How much progress is made? How many new shares are we issuing? How is the governance of the company evolving? Tesla, I'm studying for a decade, watching their corporate governance, how they raise money, how careful they are to spend it, how much progress they make spending it. Like this takes a really long time and is really hard. And it takes, years to understand these extremely complex businesses. So the fact that people can even think they understand Lucid with this PowerPoint, I don't even think the full SEC filing where the, employee, a director salaries, which is one thing I was looking up. I couldn't even find that because I don't think that SEC filing's out. So I'm like, dude, there's not even enough. The data hasn't even come out for you to start researching this stock. So
it's early on it's a social play, and then it becomes a question of when does it hit that peak where it's like, does it make sense selling now or holding? For me personally, where I am with my cost basis, this is a hold for me. But I agree with you. In fact, one of the things I say regularly is take these investor presentations, and it's almost not worth reading them because they will brainwash you too much to one side. They're very dangerous. I see a lot, and I don't. This is not thinking of anyone in particular because I can't even think of somebody off the top of my head. But I see a lot of media will take these presentations, whether it's on YouTube or Twitter or whatever, and they'll literally page through. Oh, look, they're going to have this total of the total addressable market. It's always TAM. It's always a percent of TAM. That's how these everything's TAM. Okay, it's like the biggest clickbait in the world is the TAM's going to be moon. And this is where we go is 1% of moon. And that's high, that's higher than I can jump. It's ridiculous, man. I don't know. Throw this crap away. Like, I think what these SPACs are is a money raise, and look, you have to give them credit. They just raised, I think, what is it? $4.5 billion or something like that. They got some money now. They got some money to crank. I know you can't speak to ARC. Obviously, you guys have a different setup at Archimoto, a different type of vehicle. I think at the end of, I think the Bloomberg was showing your end of 19. There's like $16 million or something like that. These guys got like $4.5 billion, right? It obviously totally different market, but yeah, I mean, like $4.5 billion, they've got some money. So like, yeah, you're right. Like, let's see some actual production now. But it's kind of like they're up at bat. Now let's see what you can do.
And so if I was a startup advisor for Lucid, like this, what I would be telling them is like, bro, we raised way too much money. Like we're going to get way too fat. We're going to get way too lazy. Like you guys haven't done anything. We haven't even delivered a single car. And now we're all partying like we IPO'd and we're 60 bill. We got billions in the bank. It's like, dude, the work hasn't even started. And so this has nothing to do with Lucid, but just like, I invest a lot in startups and I've been having this conversation with a couple of my startups. I feel like that's the era we're in. Like everybody's hyped. You got the blog post, there's this. And I'm like, are your users growing? And they're like, no. And I'm like, then I don't care. You're going to tell me your valuation just octupled and you want me to give you more money at an 8x valuation when your metric isn't the same, but because you got on a blog post. Like that is the era we're in. And Lucid is that on a $10 billion scale, So that's what I would be saying. If I was an advisor to them, I'd be like, bro, this is the worst idea. Like we have way too much money. We're going to hire they have 2,000 people. They're going to hire 3,000 guaranteed. Like, they end up with thousands of people they don't need. So if things are going correctly, they're going to do a massive series of layoffs in a year and a half from all the crap they're hiring now. But you know what I mean? So there's a lot of levels to this.
We found the CCIV bear.
I think Apple might buy it. I think Apple wanted to buy it. That's my bull case on Lucid. Is Apple wants Lucid because Rawlinson and Doug Field, who Apple poached, were part of the Model S, and they think that if they get them back together, they can beat Tesla. So I think that's Lucid's out.
I just found this out like a couple hours ago with in a live stream actually. Did you know that Johnny Ives is on the board of Churchill, which is the SPAC company? Yeah, that was my face too, man.
And so I've heard a lot of interesting rumors about that, where like Tim Cook wants the car to be his thing, like his legacy defining project. They've been working on it. He wants it to be his thing. And then Johnny Ive was beefing with the design and didn't think it was going to work, which is why he left and created his own design firm to little sort of detach from that. And when Tesla was getting, Apple wanted to buy Tesla, one of the reasons the deal didn't work is because Johnny Ive and Elon were not seeing eye to eye on the design of the vehicle. And Johnny Ive wanted final say, but Elon wanted final say. So there was also a culture clash there. So I don't know. That's one thing I've been researching a lot, and kind of in between lines, there's a really decade-long history of Apple, Tesla courtship that failed, which is why I think Apple doesn't want to miss that again and wishes they bought Lucid for $10 billion, but maybe now it's too expensive. But
what? Tell me about this, because the story we hear at the surface level media is that Elon went to Steve Jobs or Tim Cook, I think it was at the time, and wanted to sell Tesla, and he wouldn't take the meeting. Like that's the surface level story. What you just said is a little deeper. Tell me more. What are people missing?
So I talked to an employee who worked at Tesla during these times and was telling me a lot about it, sort of like, and dude, it's fascinating. So it started in 2012 or 2013. They wanted to buy Tesla, but the value skyrocketed, so they couldn't make it happen. Like the M&A teams were meeting. This has been going on for years. And then 2017, 2018, Elon actually thought Tesla was going to run out of cash. Model 3 ramp wasn't going well, that automation. And so the Apple M&A team was still there, but they were like, we're not going to pay 80 billion for Tesla or whatever. Like it's trading for 40 or 50. We got to buy it for 80. It was just too much. And so the talks fell apart, but Elon was still worried, like, Apple's got all the money. We need the money. We're going to go out of business. So that's when he reached out to Tim Cook, is after the M&A teams couldn't come to an agreement, was like, yo, Tim, let's have a meeting. Like, I want to scheme with you. And Tim said no. So that's why Elon took that so personally. And this is just all like speculation. I might not be right. I'm pretty sure this is how it went down. But so that's why Elon was kind of tweeted it and want that out the record. Because it was like Tim Cook and Apple are going to say they're for sustainability. They're going to say they want to do the future of the world. But it's like when you have the chance to like give the olive branch to save Tesla, who was changing that trajectory of climate emissions of humanity, they didn't give it to them. And that's why Elon wanted that story to be told. And then Tesla just exploded and is way too expensive for Apple to buy them. And that's Apple's M&A team's biggest regret of the past decade, is missing Tesla. And that's why they're spending so much time on Lucid, because they don't want to mess it up again. And they know the car is their only growth opportunity that can add $1 trillion to market cap. And so,
$1 trillion. I was actually speculating about this earlier. I was thinking to myself, okay, say Apple gets into their own cars. What's it going to add? Like a couple $100 million as a brand new car company? You think like long-term adds $1 trillion or quickly?
Yeah, I think the smartphone was this incredible platform, like Uber, Facebook, Lyft, DoorDash, all these companies. What do they have in common? That we all run them through our phone, and the phone created like trillions of dollars of market cap and value. I think when the car becomes a phone with just a box around it that can move around, it's way more useful. And once they're autonomous and we have tens and tens of millions of users, Tesla rolls out third-party developing app store. This is the new smart device of the 2030s that changes everything and unlocks huge value. And so I think that's why Amazon, and don't take my word for it. Like, that's why Amazon is going into this. That's why Google, did Waymo for 10 years and invested billions. That's why Apple's been doing Project Titan for 10 years. That's why Lucid is worth 60 billion when they haven't done anything, just because there's a chance that they might play in this multi-trillion-dollar robo-taxi economy.
Wow. So I spoke with Sandy Monroe the other day. He thinks that robo-taxis are like a little pit stop, that we're basically going to go from autonomous driving to eVTOLs. What's your take?
It's possible, but it's going to take a while. I don't know. Elon has a really interesting electric jet design he was just talking about on Joe Rogan. But that batteries have to get way better. But I don't know. I'm not convinced. Like, I think the future is what we make it. And I don't know if we want the future. I'm looking outside right now. I don't know if I want cars flying around over my head super loud everywhere. Like, I think that's just a niche in corridors along cities. Like, you don't want them. I don't know. Man, we're getting into wild territory if that's what we're starting to think about, right? Like,
it's true. Instead of garages, you have helipads.
Like, I'm more of the case that autonomy will take another 10 years and that Elon's way too hyped on that, but versus what comes after autonomy is kind of my theory. And then once we get autonomy, if we can really move around for 1/10 the cost per mile in cities, like how much, pressure is there to innovate on another solution for a while?
Yeah, that's really interesting. Yeah, so what? Okay, you said that Tesla is overvalued. What's your buy target for Tesla? And I mean, whether we get there or not, like, what do you think is a reasonable valuation?
I mean, so my cost basis on Tesla is 240 per share pre-split. So I don't even know what that is, like $50 per share. So that's where my cost basis is. And it's still like 80, 70% of my portfolio. Like, you know, Tesla's just not compelling to me on an upside basis until we get at least below, I mean, 500, like, I think Tesla's worth 200 billion and that's normal. And that's maybe a fair value for where we're at today in a normalized market condition. So that's a third of where we're at today. But I think you should attach a premium to that. But I don't know. I do think we're overvalued. Like I just think, there's the cash flow, the yield, even if you assume the 3 billion of operating cash flow that they posted last quarter without CapEx times 4, 12 billion, 500 billion on that, that's what, a 2.4% free cash flow yield. Like, I don't know. It just feels ridiculous unless, I don't know. Maybe it's not because there's no yield anywhere. I don't know if I crunch those numbers right, but I don't know. I think about it every day. Like I wish I had a good answer for you.
And it's frustrating because I look at, for example, we were talking about, you were talking about how important increasing metrics are, like the blog posts. Like we got to see numbers going up. Mm-hmm. I was looking at Square earnings a little bit, and that there is a company that I think is a great company that has a lot of growth built into its pricing. And when they missed revenue expectations, the thing sold off 5%, which isn't like dramatic, but I mean, it's a big company. 5% is something. And it just, I think sometimes it goes to show like maybe we're just in this weird market right now where everybody's got these insane expectations that these companies who are real companies, like they actually have to hire people to grow, then they have to provide more service, they have to get more businesses on board or customers or whatever. Is Wall Street maybe just drinking some euphoria Kool-Aid? Like what's going on?
And that's why I was pumped about the sell-off today. Because look, the intrinsic value of Tesla is just doing this, right? But here we were for years way below it, and now we're way above it, but it's still going to catch up and hit that. That's why I'm not selling. But the stock market, it goes wildly swinging around that intrinsic value. So that's just the most important thing to remember.
Yeah, that's a good point. Just so always reverting to that sort of intrinsic value, but swinging left and right along the way, like the quote you mentioned earlier about long-term weighing machine. So then, what for you is the next thing you're investing in? You've got your Tesla position. Is it just put more money into Tesla, or what's the next number one for you?
So I don't know if this is a number one, but my last big bet I just placed was in a company called Carta, which is a private investment deal I did for HyperGuap. Got to get you into HyperGuap, actually. But
sure. What was it? Carta? What?
But yeah, Carta, which is a software company, a financial services company. Mark Andreessen's on the board and just wrote a blog post about their new thing called Carta X, which is what they're calling the third option. So instead of SPACing or IPOing or remaining private, they're essentially building from the ground up a exchange for private shares. Right now, it's just for accredited investors. And if you Google Carta X, that's the thing on the top, is the platform they launched on top of their kind of existing business, which is this marketplace to exchange private company equity. So if this takes off, SPACing won't be a thing. Impossible Foods, Neuralink, The Boring Company, Robinhood, none of these companies are actually trading that you can invest in. I still think the best Clubhouse, I still think the best private companies in the world who think super long-term, SpaceX, do not want their stock trade on the public markets. Look at the mess of GameStop, how you can short your stock more than even exists. Like, I think the market's desperate for an alternative of how to unlock the value in the equity markets. And Carta has this mission of create more owners. Their first name was eShares, to like digitize stock and make it tradable. Like instead of getting this paper settlement thing, you settle everything digitally. So I think Carta is in the super early days of building what could be the future of like NASDAQ 2.0 or 3.0, and how all private company equity gets exchanged in this software native way. So that's kind of an out there theory, but I think that's something that I'm in the next year or two becomes a lot more relevant and people are going to start hearing more about.
Very interesting. Thank you for that. Yeah, I agree that a lot of folks I feel like on Wall Street are looking for those off-market opportunities now, which again feels so frustrating for the retail person who's maybe not an accredited investor because everybody's looking for something to invest in, and it's frustrating with where valuations sit right now. But it's such a clear consequence of the essentially the world's monetary policies that have just been so encouraging with low interest rates and money printing and stimulus, essentially monetary stimulus. So, do you think that this today was this just let some pressure out of the pot, a little one-off, or do you think we have a larger crash to come?
I'd be lying if I knew. I spend zero time guessing on the macro. Stock market's up today, down tomorrow, up today, down tomorrow. I don't care. Great companies are going to do great in the long run. That's just where I focus all my time. And I think if you're caring about the market going up and down and you're freaking out, checking your phone, watching it all day, like, bro, like get a life. Like, come on. There's a world out there. Like,
That's a good point. That's a really good point. Yeah, it's definitely if you're trying to trade, you could be glued to stocks all day long. It can be addicting. So what about do you have any even interest in looking into the electric vehicle commercial segment, or is it mostly for you? Look, I've got Tesla over here. I know SpaceX. You're super bullish on that. Obviously, private. You've got some of these other private investments. Is there anything on the market publicly available right now that's even remotely interesting to you?
So the biggest one that I've been pounding the table on, I thought Apple should buy him. I bought in at 22 and then it sold at 27, killing myself. Peloton. I think that is such a good, well-run company. They're making the world more fit. It's a super, it's like an 8 times sales. That's 33 billion, half a Lucid, but they just did 1.2 billion in revenue. They're profitable. They have an amazing product that people are obsessed with. I think they make it cheaper. They come out with new stuff, different ways to work out. They're making humans healthier. They have a software recurring subscription component. Amazing CEO, owner, operator, founder, kicking ass, executed at every single turn. Like, to me, that is an A+ company that I do not see trading for an A+++++++ valuation, which is what every company is. They're an A+ company trading for an A+ valuation, which actually seems fair. So if there was one company that's one that I've been really fascinated with and just I think is very misunderstood.
One of the things that was so fascinating about Peloton was back at the beginning of the pandemic. I also invested in Peloton. It's probably right around the size of my investment into even like a Neo or Square. It's right around there. So I don't have. It's not like a very, very large position. Like I've got more money in Redfin than I've got in Peloton, but it's a sizable position. When the pandemic started, one of the things that I think Wall Street is still potentially missing, and it started at the beginning of the pandemic, is Peloton was this product that you had to try it in a mall, and then you would have a commission sales rep that would take about 50% of the margin of the product. The COVID created such virality around Peloton that, in my opinion, even though people treat Peloton like a COVID play, and even though Peloton might suffer in the short term over the next 6 months as people maybe rotate out of the stay-at-home plays and go into maybe the recovery plays, I think Peloton now has this position where they may never have to have, and I'm sorry for the sales reps, but they may get to a point where they never have to have commissioned sales reps anymore. And it almost becomes like a Tesla model. Tesla started with commissioned sales reps in the stores, and then they got rid of them. And I think Peloton, that could make margin on these $2,000 to $3,000 products. Whew. Oh, and I'm not even talking about the recurring subscription revenue. That's another thing. But I mean, the commissions thing, I think Wall Street's missing that.
Dude, that's huge. You're making money on the hardware and the software. And the COVID play thing, I think they were growing over 100% pre-COVID. So I think that is the contrarian take of why I like this play, is because they're lumped in.
But they were tiny.
They were tiny, but the people think the growth is just going to go away and it's a COVID bump. When I'm like, no, this is a structural, long-term, this is a game-changing, super disruptive hyper-growth company that is really changing their segment for the long term as a disruptor. And so I think they're being misinterpreted as a COVID play. So that's why I like that opportunity.
Why do you think, or what do you think rather, about their Procore acquisition? The manufacturer of all that gym equipment.
I didn't look into that, but I know their next thing they want to do is the rowing machine. But I haven't looked into Procore. So if I was thinking of growth, the rowing machine. So what do I think about Peloton? Like my biking's more my legs, right? So how can I get my upper part of my workout too? And the other thing that Peloton's done, the best part of their business model is they've created a scalable influencer model for trainers. So if you're a trainer, you can actually become like an influencer on Peloton and scale way beyond a class of 30 people in a room. I can teach 30,000 in one class and make 1,000 times more money, have a whole career, get sponsored. So now you have a thing where the best trainers in the world, the most energetic, the most charismatic, the biggest influencers want to build it on this platform because that's the platform where you build your own following. So they've created this amazing incentive alignment to get the best content from the best trainers and the first ones to sort of create the virtual workout influencer at scale. And that to me is a bigger disruption than this home gym thing. And so there's a lot of, I think Wall Street just doesn't understand about what Peloton's doing.
That's really interesting. I mean, one thing I love, first of all, is the commission model, because the commission model, or not the commission model, the subscription model that we've got with Peloton, because I feel like people will refuse to cancel their at-home Peloton subscription because they will always tell themselves, tomorrow is the day I will go back in front of that trainer. They will always do that. They will not admit failure and cancel that $39.99 a month or whatever it is. But I have not even thought about, I mean, what you just mentioned is very similar to basically, you've got these really good apps on the Apple App Store, and there are some apps you can only get on the Apple App Store, especially when the Apple App Store first came around. Before there was an Android App Store, there was only Apple. And it's like you have these really, really good apps, and they're just running on the Apple ecosystem. I mean, it's kind of similar to almost like, hey, you get these really, really good celebrity trainers, and they're only on the Peloton platform, huh? Is kind of potentially what you're thinking?
Yeah, definitely. And it's almost hard to really wrap our heads around because we've never seen a model like this, but they're onto something big. When you see people pumped about the classes, wanting to do them, and I think there's had somewhere like 30,000. They keep breaking the record for like most people in a class. Like that's, there's something cool there.
That is cool. That is really cool. I mean, I could even see in the future, because not everybody has room for all this equipment. I could see gyms of the future just being Peloton gyms. Like you go there and they're just literally, it's just like, there's the Peloton bicep machine and there's some dude like, come on, Kevin, working hard, hard, like, I don't know, am I wrong?
It'll be like a hologram. Actually, you want to know an even better play for Peloton is it's a VR play. What's the infrastructure? We have our suit on and we need to run everywhere with our helmet and we're strapped into place and there's a treadmill on the bottom and we're getting pumped up by a trainer, but we're also gaming on that platform. To me, Peloton should buy out like Call of Duty and start developing games for Peloton where it's just as much about working out as it is like a game in a virtual world. Because I think the technology of having real estate in our homes that we can walk and move around on is a game changer. Like that's the VR. That's the VR
that right there. Sell Tesla, man. I'm going all in on that right there. Because if I could play Call of Duty while getting a workout, damn. That's the future, man. I like that. That is a future I want to be in. Oh, man.
Peloton, invest in the future you believe in. Get them to push into gaming. I actually think now I'm like, dude, I should probably start getting back into Peloton because especially with these couple moonshots, this could add another 50 bill to market cap, bro. Like,
yeah, that is really, really brilliant. I'm fascinated by even just that future. So, okay, so that's Peloton. What do you think about? Let's see, what's another thing? So Peloton, you really like. Have you looked into Matterport at all? That's one. Maybe I'm going to interview the CEO of Matterport tomorrow. That's the 3D scanning business for real estate or architecture, construction, the camera that spins around and they collect all the artificial data. I really think artificial intelligence has a really big future. And we see a lot of that in Tesla too, with their AI computer. But the possibilities for all of this AI data, I mean, I just feel like is endless. I mean, what value can you put on these AI companies that are coming around?
Yeah, the AI thing is, it's hard to know because you'll hear the buzzword of AI, but when you think about a company that could actually generate like a bunch of value as being an AI company and what that actually is, like the only AI at scale that works right now is like YouTube recommendation algorithm, Facebook's content recommendation algorithms. It's really just dictating the content that we watch. That's why I think what Tesla is doing as an AI company is so interesting of like, operating machinery and taking out millions of humans and just being an AI to operate that machinery, like that seems like probably a lot more ambitious, risky, real world use case of true AI at scale than what Facebook or YouTube's doing. So actually, yeah, there's
You've got, I want to know this, what do you know about this supercomputer they have, the Dojo over at Tesla? Do you know much about this thing?
This sounds wild. I mean, this is the kind of innovation where Tesla's like 8,000 light years ahead of anyone else, which is, okay, picture training for our neural net and frame by frame versus like video training. Like, how do we get the neural net to, instead of just processing images and think about them, process video, which is a huge leap and a huge kind of breakthrough in the safety and reliability of the system, which is
that not possible now?
I think, well, they've been slowly doing it.
Okay.
So I'm not sure. This is a little honestly over my depth, but what was so fascinating is I thought Elon's recent tweet about Dojo for Doge. So Elon thinks, people think he's joking about Doge. I don't think he is. And I've had a lot of emails about what if Tesla uses their, huge battery and computers for cryptocurrency mining on all their Teslas and stabilizes a currency network about that. And Dojo is that system. And then Elon's tweeting Dojo for Doge. So I think there's maybe driving the car isn't the only thing the Tesla AI can do in the long run.
Mining Dogecoin.
Mining Dogecoin while it's in your garage. And yeah.
Wow. I mean, just endless possibilities. So on coins, I've been looking into these non-fungible tokens. And I've been meaning to ask you about what your thoughts are on Logan Paul selling over $3 million worth of non-fungible tokens or whatever, Ethereum stakes in this digital piece of art he put together that it doesn't exist. It's like, or it's some card that they drew up and designed and said, hey, you can own a stake in this Logan Paul card. Here you go. Only 3,000 spots or whatever, or 4,000, whatever it is. And boom, they raised $3 million in a day.
Yeah, so this is totally the future, this NFT thing. We could be hitting a bubble where it's like, okay, too much money is flowing into this digital art thing. But I think at its core, it's a way to like tokenize and trade art that's digital. And I think this is so it's so cutting edge. Like, I'm a bigger investor in the Unisocks, just that started out as a fun project, which was this non-fungible token for a sock. I think it's an NFT. Have you heard of the Unisock?
You brought that up.
I mentioned them to you.
I keep thinking about like, you have the share of a sock basically. And
so I have one sock that I bought for $60 that is now worth like 50,000. It hit 90,000. And I also got a dividend of 1,000 Uniswap tokens, which are now worth 20 grand. So $60 to at one point, well over 100 grand. Like, it was mind boggling. And it was because this was like the first NFT. It was this first like real world tokenized product. So there's sort of some computer science history now where and this is a little bit different than because mine's like redeemable for a real sock. We're talking about Logan Paul. It's just like literally a pixel. Like, there's not even a real sock behind it. It's just a pixel. But I think this is a new category of art, and it's like Bitcoin. Just because it's in cyberspace and you can't wrap your head around it doesn't mean it's not real. People are paying for it. Maybe there's way too much money flowing into it now and too much excitement. But this idea that there's digital artwork, the more time we spend in the digital world, the more value these digital things will have. If you get a piece of this one-of-one digital item, which has cultural relevance, just like a painting, look at a Basquiat. You could say that only has $100 of real-world stuff and $100 million of virtual value in the brand. It's just $100 of a painting and a canvas and some acrylics or whatever. So when you look at a $100,000 sneaker, it's a $100 sneaker with $99,900 worth of virtual value. So I think that we're in this massive liquidity tidal wave of securitizing all these sorts of art and collectibles and sneakers and cultural products that are going to start looking like money and it really should be thought of as art. And I just think a lot of people aren't understanding it, but that's why I'm so fascinated and excited by the space. Like, I was a sneaker collector back in the day, and I'm like, bro, we had to do this. How many times did I get scammed for fake sneakers? Yeezys are going to trade on the blockchain. This is the future. I see it. This technology is how all this limited collectible, what is right now a tens of billion of dollar fragmented market expands into hundreds of billions. And then all those, as the liquidity comes in, the prices go up. So I think, yeah.
I gotta know though. I mean, why? Like, look, I get that like this Logan Paul thing is just pixels on a screen, but so is Bitcoin in some sense, right? At what point do people say, and in fairness, we started this discussion about actually producing a product at Lucid, And now we're talking about tokens and these non-fungible token investment stakes or whatever into this pixels essentially. And there's so much liquidity that people are just desperate to go buy anything. Isn't this like really dangerous, or is because there are so many options for you to put your money into kind of just maybe in a weird way de-risk things? Because it's like we just keep coming up with new specs or new tokens, and people can only buy and hold so much stuff. So just if we have so much more money, let's just create 10,000 more products, you know?
Yeah, it does seem weird because it's like, when is this going to hit the real world? Is it all totally a bubble? Is it like Beanie Babies or that kind of thing? And I think the truth is somewhere in between. Like, we're going to see a lot of the hype fizzle, a lot of these NFTs that sell for millions go to like zero, that will be worthless. But there'll be some that will be weirdly looked at as iconic, and that on Travis Scott's next Fortnite stream will be an interactive landmark in the virtual world that everyone will want to interact with, and you'll charge them a little bit of Bitcoin to interact with it, and all of a sudden you're generating millions in fees from your NFT token in the digital world. Like, where this all goes is pretty mind-boggling. But my bet is that people care more about what happens in the digital world, as time goes on, not less. So,
because I mean, when I first heard, I think it was like 3 years ago or something like that, some people were talking about like digital real estate. Oh, go claim your digital real estate. Yeah. And I'm like, dude, I'm a real estate agent. Like, I'm a real estate, right? Like, what? This makes no sense to me. Isn't this the same thing as digital real estate?
Yeah, definitely. In some ways. Yeah.
That's scary.
No, it is scary. I don't know. I wish I had a better answer.
Are you excited about it because you made so much money on your sock?
Yeah. I mean, I was excited about it because I thought this was a piece of history of like, this is the future of how these limited edition streetwear things launch. And I love limited edition streetwear, so I want to be a part of history, and I bought it. And then all of a sudden I started learning about it and got thrust into this world. But I think, I don't know. I think just because we don't understand something's value doesn't mean it doesn't have value. That's one of the biggest things. And I just try and be a student of the game. And it's like, bro, they're paying millions of dollars for this Logan Paul pixel. Like, I can say it's not worth that, but I'm wrong because people are paying for it. They're not paying millions of dollars for my pixel. What do I know? So I don't know. I just try and be a student of the game and kind of watch what happens. But I think there's something to be said about if everything's going digital, like, I don't know, like I'm actually working on this video now about Clubhouse is a VR company. Like, Clubhouse is going to expand this VR world. They're building rooms where we can hang out in. Imagine if they let you launch an avatar. There's a room where you can play with that avatar. And then, that's a massive universe for these like virtual goods and NFTs to sort of thrive in. And so when I think about all these ecosystems emerging, I think there's so many opportunities where I see more humans spending more time online and putting more of their, worth and self-esteem and monetary value into that digital life and avatar. And you can think that's ridiculous or messed up, but I would argue history's on my side of that happening, and it will continue to happen. And then we have a massive explosion in this NFT market. But like anything, the bad NFTs won't last. I actually have a moonshot where I think every company should launch an NFT. Like, if you're Uber and you have a guy who hits 10,000 rides, give him an NFT to hold in his wallet and show his homies. Like, if you're a restaurant and you have a best customer, give them an NFT. If you're Tesla, every 1 in 1,000 Tesla buyers should get an NFT of the car for their virtual wallet. Like, these are free to make. Why are they not? And they're amazing marketing tools. So I think we're going to see, like, the Logan Paul pumping his own NFT is genius because he got in while the bubble's still hot. But soon I think the supply is just going to skyrocket of these things.
Oh yeah. Yeah. It's interesting, this virtual world thing. Look at this. This is EXP Real Estate, is a virtual real estate brokerage for real. Sorry, let me make this a little better. It's for real estate agents. So it's an actual thing here. It's a company that does, all the agents can work from home or whatever. But if you Google EXPI World or virtual world or whatever, you literally get, this virtual place where you could just like, oh, I'm going to park my avatar, somewhere on this virtual world. And in the meantime, people are at home, doing whatever they need to do for their clients or their contracts or whatever. Or, so-and-so is doing a training seminar. Here, let me go to this virtual classroom, which we kind of see right here. And then your avatar goes in there. Like, is this kind of somewhat what you're thinking? It could be a more mainstream thing, not just for real estate agents, which EXPI is doing, or EXPI is the stock ticker symbol. EXP World is doing. Do you think that something like that could actually go mainstream for everything?
Yeah, like you'll be on your Peloton, you'll put on your VR, you'll log into Clubhouse, and then you'll go into something like that, and you'll be walking around on your Peloton in your house, but it'll feel like you're walking around in this virtual world. Whenever you talk, your avatar will automatically get shot to the front of the stage so everyone can see who you are. And then, I don't know, I'm just kind of making it up, but like, yeah, I think that's exactly the kind of, like, I don't know. It's like the Matrix, it's what we're all talking about when we all have Neuralinks. How easy is it to just log in and,
how far away am I from a link?
10 years, maybe 15 years. Okay. But how many people are already in VR? How many people are already playing video games? How many people are already spending so much of their life on a screen, living in the digital world?
About 16 hours. A day?
Yeah, and then you're asleep for 8. So you're either in dreamland or on the screen land. You're never even IRL now anyway. Like,
even when I was driving to Santa Barbara today, I'm filming a video on a screen. That's a good point. Wow, man, that's crazy. What a bizarro world. So, okay, so next step here for you. I want to wrap it up on because I got to go. Maybe 5 more minutes here. I want to circle back to Tesla and CCIV here. Mostly I want to hear, I know you're very bullish on Tesla. I want to know though, is Tesla going to 10x again, or is this maybe a 2x stock and it's going to be something else that's going to 10x for it?
I think Tesla's going to 10 trillion even if fiat doesn't hyperinflate. It will just take time. Is it 2027? Is it 2030? Is it 2035? I don't know. But I think Tesla has a 10x in the long run if they execute on autonomy and they execute on bringing the solar roof and they execute on sort of creating this decentralized energy grid and selling all these electric cars, buses and trucks. I think we have a $10 trillion company and really an energy company at that point. But I think that could happen. I don't know. The part where I get bearish on Tesla is if Elon leaves. If he leaves,
which he's implied, maybe 4 or 5 years, he might leave.
Exactly, which makes me worried because that's on my time frame of being an investor, and I think a huge part of Tesla is the innovation premium associated with Elon Musk, which is justified. It's a call option on the smartest inventor of all time, and what he'll come up with next to create shareholder value. The second that smartest inventor is not, or is putting less of his effort and focus into game-changing innovations and disruptions for that entity, the innovation premium will decrease, and so.
I see. Okay. So, and I just linked your channel too in the, if you refresh, it's in the description. If anybody wants to follow HyperChange, I added it to the description. I realized I didn't have it when we went live and I'm sorry about that. So shout out to obviously your channel HyperChange. So, okay. So you think Elon leaving is a big deal. So you must not be happy about Jeff Bezos leaving.
Yeah, I don't own any Amazon stock, but I tweeted that. Gene Munster was like, yo, this is not a big deal. Bezos leaving, it's still going to operate. And I replied, I was like, I kind of disagree, bro. Like if I was on long Amazon, the innovation premium of this was selling books online. If we stopped there, this would have been a $1 billion company, but we had Bezos keep scheming. And so that's why it's worth a $2 trillion or whatever. So Andy Jassy was a founder of the company or almost founder, worked there for a really long time. So that's about as good as you can get. But I don't know. I think it's like when Michael Jordan leaves the Bulls, you're getting less pumped on the Bulls. Like it just, that is what it is. When these people are so great and they create so much value, they are the needle mover for these entities. And when they leave, they take that magic with them.
What about like Steve Jobs?
Steve Jobs is, that's what makes me optimistic about Tesla is that you can milk your profits for decades after that, founder leaves. Look at all these other companies who like IBM or like all, how many other random big companies, Chevron, are still milking whatever. So, but I think Apple's done innovating. I mean, my phone is bigger than last year and heavier. And I don't think I can't even tell if the camera's better, but I know the battery's worse too. So I'm like, dude, this is, they're just waiting to get disrupted. But Steve Jobs was
Wow.
just so good that he gave them such a head start that it's just going to take another decade for it to happen. But Elon's going to beat them. Neuralink, I mean, this is the chip in our hand that we look at with our eyes versus the chip in our head that we think through. It's yeah.
That's amazing. So really, Neuralink, the cell phone of your brain, basically, or the embedded cell phone.
Yeah. And it's not even, it just, imagine if you could control a computer with your mind. That's what Neuralink is, like without touching or tapping or typing, but you could do all that with your brain, clicking, typing, moving, opening windows, Googling something. If the computer is a bicycle for the mind, the Neuralink is a hyperloop for the mind.
Wow, that's a big step. Yeah, geez. So okay, so very bullish, obviously, on Elon here, unless Elon leaves. I'm shocked though. I mean, you 10x. I mean, we don't have. At least I don't. What's the largest companies we got? We have like Microsoft and Amazon and Apple. Aren't they all like 2 trill? Like, I mean,
Yeah.
you're thinking 3 to 4x the largest companies that exist today for Tesla, which is 10 to 12 to 13x what it is today.
Yeah, I think all those companies will grow. Like there'll be a handful of $10 trillion companies eventually, just with inflation and the way these companies are growing. Like I think it's, like Amazon, I think they're going to 5 trill even without Bezos.
And so do you think inflation is going to be a big deal in the next 2-3 years here? Or how much longer do we have before rates go to the moon and we all get screwed out of the market?
Yeah. How do we, that's actually the biggest thing. It's like, we're talking about these trillions this, trillions that, Lucid's worth 60. It feels like we're just playing with monopoly money. I mean, how long can we go on? I think the biggest trend that has changed with all of 2020 is that governments are now okay with pressing the button to print money. UBI was a radical theory just a year or two ago. Now it is almost like we already did it twice. And I bet you before Biden's out, we're printing a lot more money, just sending checks to Americans. And so how is that not rapidly accelerating dilution of fiat currency? That's my biggest pet peeve if I own a stock. That's what I think Lucid's going to do. Just dilute. I hate dilution. Shrinks your price of the piece of the pie, makes your purchasing power less. That is the biggest trend happening in all of finance right now, is the like accelerating dilution spiral of fiat, which I think at some point has to lead to inflation. And I'd argue we're already seeing it with Lucid worth 60.
Interesting. Yeah. So how much? Well, let's see. I'm trying to think. Bernie Sanders today mentioned that he's pushing Biden for a $3 trillion infrastructure package after this $1.9 trillion stimulus package that feels like it's coming. What actions are you taking to hedge against this potential inflation and this continued money printing that you said you think is going to come here through the Biden administration?
I don't know if Bitcoin's going up or Tesla stock's going up or any of that's going up, but I think fiat's going down. So I want to own equity in technologies that I think are more relevant in 10 years than today. I want to own assets that can't be diluted, like Bitcoin. And that's what I call the awakening, which people on my channel hate that word, but that's what I think is really happening, is people are waking up like, wait, like if this is diluting, like I kind of want my money in other stuff, like maybe an NFT, there's nothing backing a dollar, just a piece of paper. Maybe a sock's better than that.
Oh, wow. that's a statement there. I mean, so what you're saying is the digital card of Logan Paul that, I'll give him credit. Maybe it took him 2 weeks to design. They probably put in a hard 2 weeks of work for that. Okay. You're saying that because there's only one of those and, they're only selling a certain amount of tokens against that. That could be more valuable than essentially the US dollar, huh?
Well, it's like what Elon said about we bought Bitcoin. Bitcoin sucks, but it sucks less than the dollar. And so, it's not like I think these things are great, but I just think without the gold standard of the dollar and with us just having this random bureaucratic committee deciding how much we print, like my confidence in that as an asset and being strategic about how it prints and what it does and who's backing it and how much value it has is low. And when I think about, it's all about the perception, the change in the perception of the future that dictates value. So it's like, okay, well, if everybody believes fiat's 150 trillion and that the US dollar will always be a thing, and I think that's the future that everybody believes. So I'm starting to bet that actually, I think the perception will change, that the dollar isn't the only thing to store value, that we don't need to keep all our money in dollars, that Bitcoin might be a thing, that real estate might be a thing, that tech stocks might be a thing, and that 150 trillion is going to leach out into all these other assets as people realize that. And so I think that pendulum is about to swing. And that's why I'm a contrarian. I do it when nobody believes it's going to happen. You know, I was long Tesla when everybody thought they were going to fail. That's why I made guap, you know? So I think it's the same way of Bitcoin and the dollar. It's like, yeah, nobody believes that Bitcoin will displace the dollar when I started investing in it. So that's why I'm going to bet on it, because the second that perception changes, that's when the value accrues.
Wow. That's absolutely incredible. Yeah, I think that's very fascinating. So, oh gosh, a lot of NFTs coming. Well, thank you so much for your time today. This has been absolutely fascinating. I love it. I love hearing your opinions. How can people get in touch with you?
Yeah, thank you so much for having me. I love your channel. I had a blast today. But yeah, Gally, my channel is HyperChange. You could just search HyperChange on YouTube or Twitter and you'll find me.
That's amazing. Hey, well, thank you so much. We'll have to have you on again. Hopefully next time it's not on a day that's like one of those days you wake up, you go, holy crap. Hopefully we're like, oh yeah, Tesla 1K, let's go, moon, yeah, right?
Definitely.
So thank you. Really appreciate it. And for anybody watching, if you found this helpful, consider sharing the video, consider subscribing, check out HyperChange on YouTube. And folks, we will see you in the next one. Keep in mind, in about 7 minutes, I will be on the Millennial Money channel with Graham, Andre, and Jeremy. Thanks so much. We'll see you next time.